It is another crazy day in the exchange wars that are happening out there for sure right now. We'll dive into a lot of what's happening with KuCoin, Kraken, Binance, and many others. It's going to be interesting today. So stay tuned for a lot of this. My name is Paul Barron. Welcome back into Tech Path. We'll get into a lot of this lineup. I'll probably give you guys some sentiment toward the end. We'll try to do some back and forth on the questions. So make sure and stick around for that. If you do have some ideas that you want us to cover, make sure and drop them in on the question sidebar. And then don't forget to hit the like button, and hopefully that will help get this stream moving out in there. Let's start first, though, with our sponsor, and that is Trezor. If you guys are looking at, and this really should be the thing you are looking at, and that is self-custody, especially in light of today's topic, and that is the issue with a lot of exchanges that are not only struggling, but are in some precarious situations. And, when we were coming on, and I'll talk about that in a second, but check out Trezor. You're going to like it. This is one that I use. I also use others, but this is one I like because of the big screen and their own suite, which is the Trezor suite, which is a great tool set. Use our link below. It does help the channel out. All right, so let's get into it today. We were a little bit late going live, mainly because of the breaking news on the situation with Apple and what's happening with Coinbase Wallet, and most likely what will be happening with MetaMask Wallet and others, including the Trust Wallet and others out there. This is going to be a scenario that we're going to be dealing with, I think, for quite some time, maybe over the next year, around Apple's App Store situation, especially as it pertains to Web3 and NFTs, along with exchanges. Because now Apple is wanting a certain percentage of gas fees. We're going to do a whole breakdown for you guys live tomorrow on all that. So make sure and be watching for that notification. All right, so U.S. crypto exchange Kraken is now laying off 30% of its workforce. This is a concern. I mean, and you think 30%, look at this. This is, let me zoom in up on that for you guys. This is about 1,100 people. So it's a significant number overall when you look at what they've done as a company as a whole. And they even talked about that this essentially has set the company back for many years. When you look at the pressures coming in from a lot of different areas, it seems to be much like what we're seeing in the tech space, what we're seeing in the real estate space, most likely what we're going to see in the automotive, maybe even the luxury brand space as well. Macroeconomics and geopolitical factors obviously weighed in on this. And their CEO basically says, hey, we've done everything we could to try to bring costs in line, and we're screwed. We've got to be able to cut our biggest situation in terms of costs, which is going to be employment. So the cut brings the company's total workforce now to the same size it was 12 months ago, so a full year backwards. Total cryptocurrency market, of course, has fallen 16% since the FTX collapse. Bitcoin is still trading down as well at the 17.1 figure. I still believe that if FTX had not happened, we would probably be somewhere around a 30K Bitcoin. So this is not something that is going to go away. And the continuance of problems within the contagion effect, even in scenarios like this, because of the market depression, it's all, relevant to what's been happening. Obviously, from the macro pressure, if that wasn't enough, then you throw in the whole scenario with FTX. Here was Jesse Powell talking about a rough day at Kraken, and they rolled back 12 months right here. And the good thing is for Kraken, kudos to them. This is what they gave their exit people: good separation pay, a performance bonus, some benefits, a little extension on their, on their vested side of things, even the immigration support on people that were under. It's so good on them in the sense that they did the right thing. I think that is another thing that also showcases how they address the market. If they treat their people that way, I feel like they're going to treat their customers similarly. Here was CZ. Man, CZ is just a gangster these days. I don't know what's going on with this guy. Binance now jumping in, taking a subtle dig at Kraken. And the tweet basically said, which he deleted, basically said, hey, if you do risk management, and you have to kind of look at a couple of things. One was high APYs. If that exists, that's a problem. If they have layoffs, okay, that's a problem. So do your risk management and don't blame people if you're not paying attention. And this is also how you buy stocks. This is how you look at real estate. you're watching the narratives, and you're also watching those fundamentals. And fundamentals, at least in the crypto space, do kind of play into that. Make sure and smash the like button if you guys like us doing these kind of deep dives. And do some research on this whole situation with the wallets and how this might play into Apple, because I think this is going to be a big, big story that is going to continue to break on that. I'd love to get you guys' feedback. KuCoin became the topic of the debate in a crypto community on Twitter. Earlier this week, basically noticed that there was a sky-high APY offering. So everybody's kind of questioning, well, hey, if they're offering these sky-high APYs, that usually means they're trying to collect deposits. If they're trying to collect deposit, does that mean there's a liquidity issue? All these things start running through people's heads. Why? Because of what we've just lived through. So I think the key here is everybody's got caution printed on their forehead, and they're concerned about all these things. And just like I've always said, is that you've got to roll into self-custody. Just do it. It just is easy. Keep just the bare minimum in your exchanges that you need to do your trades, and move. It moves quickly. You know, if you want to go to your Ledger or your Trezor and flip out to Binance or KuCoin or wherever, the stuff moves fast, all right? And it's a low fee. I mean, there are gas fees, of course, but it's not something that is worth this, you know, the peace of mind to be able to do that. So just, I think that's something you guys should be looking at. And if you're not, come on. Here was Ran. He's been on our show a couple times. Said he just withdrew from KuCoin. I know he's a big fan of it. No issues. So remember though, I think he's in South Africa. So maybe a little different, you know, internationally. I don't know. Block here was coming in. They talked about decentralized crypto exchange volumes now nearly double in November, again, because of the FTX and what we're seeing in these centralized exchanges, which has pushed a lot of people to DeFi. And I think that to a certain extent will probably stabilize to a certain level, even though I still think we are going to continue to see growth in DeFi for sure. DEX volumes came in at 65 billion in November. This is a month-over-month increase of 93%. Pretty impressive there. And this was excluding layer 2's substantially bigger increase, doubling to 65 billion from 34 billion. So I don't know. This is are you guys using DEXs? How many of you are doing it? We probably should drop that for our maybe our polls. How many people are using DEXs versus centralized exchanges versus self-custody? I'm just kind of curious on your strategy of how you're using and securing and locking up your crypto. Crypto holders are also likely losing faith in centralized exchanges. I think, yeah, I would agree with that. And they're moving to DEXs, and where you get a self-custody and you know what's happening. You see the liquidity, you see the activity. So there is a peace of mind to that, and I think obviously that plays into it, and it will be a scenario. Here was Curve. This was a liquidity poll on ETH, saw an increase of 371%. Another good example right here. These exchanges have really kind of shot themselves in the foot, but at the same time, maybe this is just the drawdown on the market in any kind of market correction that's out there. Look at tech. You're going to see a lot less tech companies that are building now, a lot less VC capital money going into those tech companies who are building. Hence, you're going to see a lot fewer IPOs. Same kind of thing I think is happening over here with the crypto exchanges, is that it's kind of the survival of the fittest. Here is Binance now. This is where it gets interesting. Binance now, market share allegedly hitting around 77%. This is a problem if Binance becomes the critical use or factor in all of this. Here was Mario Nafal, who talked about it. Let me zoom in on that tweet right there. Binance now represents 75% of all exchange volume and almost 8.5 times that of Coinbase. We had this on the show the other day. Is this good or bad for the ecosystem? I'd love to get your feedback. If you think it's good for the ecosystem, for one monster to take kind of control, I mean, think about the Google's there, Apple's there, Facebook, all these, we've had this scenario before. Do you think that is good? Smash the like button. Maybe I should say, do you think that is bad? Smash the like button. I don't know. I'm of the mindset that we do need competition in this space, but I think DEXs will do it. Centralized is also going to have to, at some point, face the scenario of what is going to happen on the regulatory front. And I don't know that CZ is really all in on getting regulation done with DC. So CZ and DC, I don't know if that is going to play out for all this. There was a couple other things I wanted to hit on here. I think that was it on that one. Yeah, let's go over to Mike Novogratz, because he has really kind of gone after Sam Bankman-Fried, basically saying this guy's, should be locked up. I don't know if you guys saw the New York Times piece they did here yesterday, and just the amount of pushback that was really pushing at it. But Novogratz claims that this guy's delusional. This whole debacle is really pretty much, it's all them. We can all be like dime store psychiatrists, but there's a lot of narcissism. I listened to this guy last night on the New York Times piece, and to me that was clearly a delusional individual on what was reality. And even if he wasn't, I don't know if he's going after the the situation of the angle of maybe I have a mental problem, but the amount, I was looking at Jeremy Hogan, he was going to mention this on his Twitter, is that he basically put himself in a bad position like 12 different times. But the reality is, guys, this guy's probably nobody's probably going to touch him. How do you think this is going to play out? Because remember, the political ties to where this is all leading all point to this not being the case. Here was the Watch Guru piece right here. So this was him talking, basically saying, which was such a crock, saying FTX US is fully solvent. If that were the case, why would they not just open that up? Granted, he is no longer the CEO of the company. Is something happening now with FTX that, in fact, they have liquidity on this? Based on what he's saying, yes, they do. I am not buying this based on his track record. The fact that the New York Times gave him airtime to allow this to occur simply pulls you into one simple fact, and that is there is something afoot. Mainstream media, left-wing media, whatever you want to call it, definitely starting to prop up Sam Bankman-Fried. Then you've got Kevin O'Leary. I won't go into the scrap he's getting into with the crypto community, but he lost millions as an investor, got sandblasted as a spokesperson, and then he listened to this interview and he agreed with Bill Ackman that said maybe this is okay. He's all right. This was the Ackman tweet. Call me crazy, but I think he's telling the truth. I just don't know that could actually be the scenario. These guys understand to at least some level of what was happening. The fact that they were running this in such a capacity in which they did, that to me is still the most amazing situation. They were able to get this over some of the most sophisticated investors out there. And how this plays out into the rest of the centralized exchanges is going to be key, because this is now starting to play into this whole situation with Apple, what wallets might look like, how NFTs are going to be managed, what we may even see with something as powerful as the MetaMask wallet, the Trust wallet, the Coinbase wallet already, with Brian Armstrong talking about this. We'll break all that down for you guys as we get into it. We will give you some Bitcoin sentiment as well here toward the end of the show, so make sure and stick around. Here's another issue. Bitcoin IRA deposits at Genesis could leave retirees broke. Again, this is the contagion right there, guys, the contagion that all of this FTX pushes into. My concern is this starts and continues its trek slowly across a lot of crypto companies that essentially cannot recover. And I've known and talked to a lot of people here recently that had a lot, and it's crazy, but had a lot of their, basically their runway and their treasuries on FTX. And obviously that was either frozen and or just completely disappeared. But Genesis Trading struggling to raise new capital right here. Let me highlight that for you. And they warned of a possible restructuring in the wake of the FTX. So again, this is what I think we're going to see more of, is these kinds of restructuring modes. The problem is this, is you're dealing with the fact that all the VC money that was funneling into the crypto community and a lot of this outlying technologies that support crypto and blockchain has almost completely dried up. And most of it for fear of, okay, we don't know where this is going to land. A lot of it for fear of we might be incriminated in something when you look at some of the things that's been happening there. But with all that money drying up, what's happening is it's putting pressure on a lot of these entities that they don't have the runway to withstand, or they don't have the capacity to go back out to market. So the cap table is going to get shuffled pretty heavily. Not that this isn't happening already over in the tech side of things, because that is one of the keys that is happening. The tech startups have already started to reshuffle cap tables. What I mean by that is, let's go back 2 years. A company that was doing, I don't know, $1 million run rate in, like a SaaS company, they've got recurring revenue and they're doing $1 million run rate. You could probably do a 25 to 35x on that in terms of valuation. That shuffles the cap table very quickly from a VC coming in. Imagine if you did that in crypto right now. Your run rate, maybe even you got a decent run rate, but your X times in terms of your value is diminished dramatically. So a company that might have been worth just a year ago 100 million, and I say a project that's worth 100 million could be worth 10 million today, a 90% drop in that value. That's the new cap table. You got to go raise capital. Remember, you raised capital at 90 million or 100 million or 75 million as you were growing. And now all this regress has occurred and you don't have that ability to grow into it. So I think this is going to be the kind of scenario. And that's why you see things like KuCoin and Kraken having some of these issues. We've been trying to get some of those CEOs on our show. This is an open interview request to any exchange CEO that's out there that's willing to come on our show and really talk about the current status of the industry. Because not a lot of people, even though, to a certain extent, Brian Armstrong is a little bit vocal, at least he goes on shows, addresses it, but kind of sidesteps some of the questions. And I've got some friends over at Coinbase. I'm going to hit you guys up if you're listening in today. I'm going to ask for the interview. We need to hear from, especially these bigger exchanges, because I think these are questions that have to be answered to help people kind of understand where the future of this is all going. And for people that are new coming into the market, maybe you're new to our show right now, you're thinking, well, heck, what do I do? Do I just flip over to Fidelity and I buy on these, these kinds of locked in exchanges where I don't even know if they really own Bitcoin, but I'm going to at least kind of own it? Or do I run the whole gambit of learning about self-custody and that whole model of, holding your keys and the whole aspect of learning how to transfer and use devices and wallets and all that, which for most people, everybody remember, for most people, that is a daunting entry. And it's a threshold of entry that has held us back. That's why these centralized exchanges have absolutely went crazy in terms of growth, because they made it easy. Now you've got Senator Warren here. Here's a clip I want to play for you guys. This one gets a little bit scary of where this might be leaning, and I'll give you my analysis here, so stick around.
Now that we have that cleared up, let me turn to another issue, and that's crypto. The implosion of crypto platform FTX revealed that one of the industry's major players was not much more than a handful of magic beans. And now thousands of mom and pop investors have lost their savings, and many more are being squeezed by the contagion that FTX's collapse has triggered throughout the crypto industry. Mr. McKiernan, your current job is advising Republicans on the Senate Banking Committee, so I assume you've been watching this closely. From what you can tell so far, has the contagion that has spread through the crypto industry shaken our tradition?
I'm going to pause that there, but I do want to keep this going, because you may get lost in the video here with what she's talking about. She's going into the Senate Banking Committee, which is Senate Banking Committee. That should tell you where this is going. Also, did you notice how she kind of smirked into this? This is something that the regulators have just been chomping at the bit. Unfortunately, this thing unraveled for them. They didn't get their full role of what they were trying to do in terms of a regulatory license model, or basically locking down how centralized exchanges may end up being the only way that you could go, hence pushing out DeFi. All of that. Let's go back to the clip, because Senate Banking Committee, pay attention right here. Pay attention.
Traditional banking system.
No, Senator.
No. And that is the good news. But it didn't happen by accident. Our banks stayed safe even as crypto imploded, because many of President Biden's regulators, like Acting Chairman Gruenberg, fought to keep crypto from becoming dangerously intertwined with our banks. And he did this despite the Trump administration.
I'm going to pause it right there again, because this is the exact thing I get at around Democrats and in general lawmakers is they conflate the issue with other things. There was no regulatory guide frame for exchanges to be able to operate as a bank anyway. So they weren't defending against it. It was just, there was nothing there for them to actually do to become a bank charter. So in essence, what she's doing right now is setting up the kill shot. Listen in, here it comes.
And crypto boosters, aggressive efforts to bring crypto and all its risks into traditional banking. So Acting Chairman Grunberg, if the crypto boosters had gotten their wish and a bunch of banks that the FDIC insures were all in on crypto, for example, holding FTX's tokens on their balance sheets or accepting crypto tokens as collateral for loans, would our banking system be less safe than it is today?
Because that's another situation. So she's leading the witness, so to speak. And the scenario is that when the FDIC insurance comes into play, the amount of regulatory guidance and the oversight that happens within the banking system, except for the guys that you play golf with, and you've been at JP Morgan Chase for 25 years, and they kind of know what's going on. If that were to occur, if there had ever been FDIC insurance, and I know the Voyager debacle of that, claim and all that scenario, they were partnering up with a bank and, trying to subsidize it through that. Don't bat on them. And the FDIC came in and banked them back out and said, no, that's not the case. In fact, if you were holding cash in Voyager, guess what? You got your cash back because they were actually subsetted through the bank that was actually holding the account. But my point is this, is that they're trying to position first of all, the FDIC would never have approved any of these shenanigans that were happening at Voyager, hence didn't, were happening at Celsius, never did, was happening at FTX. In other words, the FDIC would have never been exposed because it would have exposed the problems that were happening in these exchanges in the first place. So all it would have done wouldn't have affected the banking system at all, not so. In fact, it might have saved a lot of individual depositors on Voyager, Celsius, and FTX had the federal government come in with some sort of regulatory oversight and been able to act positively of understanding what was really happening, because due diligence is real once you get to this level. That's why the SEC is a dangerous but yet also formidable foe when it comes to this. And then you get into bank charters and how those are awarded. This is such crock, and it's as if they're play acting here on this. Her last point, I think, hits it home.
I would think so, Senator.
You want to expand on that a little?
Yeah, look at her smiling.
Well, we're dealing.
Look at her.
I mean,
It's like they know the answers are coming because they're setting this up for Congress.
That were
of where everybody
engaging in highly speculative activity.
Yeah, of course they're engaging. So if they were engaging in high speculative activity and you're the FDIC and you were ever commissioned to go in and do the audit that would be required for you to even charter them as a bank, you would have killed it in the first place. So this is bullshit. Sorry, people, I just get very excited about these crock of craps that are happening on Capitol Hill. All right, so you got some other things. We'll wrap up with just more of this bloodbath crap. This is Nuro Rubini. You've seen this guy. This guy's done a couple of books on, the cryptocurrency issue. He also goes after CZ, and he calls Binance kind of the biggest one of all out there. But he talks a little bit about here. He's convinced that everything out there they're on their way to extinction. Listen, guys, I've heard this many times before. I've been in the tech industry a long enough time to see when technology is right and see when it's wrong. And right now, blockchain is right. The problem that we all know is that there's greed in these kinds of industries when it's a Wild West. And that's what we've dealt with. Had there been regulatory guidance and framework in place, a lot of this kind of stuff would not be happening. And still to this day is happening right now. So when you're out there, do your research, understand what you're getting into. If you're getting into different altcoins and some of these ICO projects that are out there, I don't recommend any of those. And I think this is just one thing that we're going to continue to see happening overall. I know we're going to get into a poll real quick. I promise you some sentiment. I'll get into that as well. For that, let's take a look at the poll real quick. All right, should customer money on crypto exchanges be federally insured for users? Yes, 66% of you say yes. Well, listen, if you do that, all right, 66% of you guys out there right now, if you do that, if you have FDIC insurance, then that exchange is going to have to pass a lot of federal regulation guidelines and disclosures. It will most likely put a lot of these exchanges into hardship just to be able to meet them, number one. Number two is fees are going to go up, all right? You think banking fees are high? Wait for your exchange fees because they're going to continue to go up. Now, you've got the other scenario that plays into this that, of course, Warren was talking about, is that the situation there plays into who is she protecting? She's protecting the banks. Why is she protecting the banks? Because the banks are going to roll out with their own crypto product. Why would you protect them? That's good for crypto, right, Paul? Well, it's good for crypto if they allow you to operate like a centralized exchange, meaning buy your crypto, send your crypto out. Fidelity is a good example of how that is not working yet. Now, if they open up a wallet and they do it, that's a different game. Maybe they're coming to a new revelation. But if they don't, it simply means you're going right back into the fiat system, which is basically, you know it as well as I do, and that's fiat being leveraged multi-times, fractional reserve banking all over, but except now they're doing it with a Bitcoin that maybe they didn't even buy until you're ready to sell it and exit Fidelity. So these are the kind of things that we're dealing with right now, guys. It's going to get weird in this market because there's so much money and opportunity up for grabs. That's why politicians are getting in the game with their hand out. That's why we're seeing big banks moving in here. That's why we're seeing nation states starting to move to the game quickly, whether it's Bitcoin mining, acquisition, gold reserves, you name it. Listen, remember, we've talked about this before. The world reserve currency, it might be within sight in terms of a shift. So be paying close attention out there for sure. Let's get to some questions. And we'll get into the sentiment that I promised you guys. All right, Miles Civis, boomers need some security. Well, I think they have it, but I think boomers are less and less likely to go in on crypto. So I'm not really tuned in on that as a potential. I think they're the good boomers. When I say the good boomers, people that understand how the system works, they're playing the game the right way. They already kind of know what's up. Bitcoin sentiment right now, I told you guys we'll load it up here. It takes a little bit to load sometimes. There it comes. Was dipping down right here a little bit over the last day, going sideways a little bit. We're getting ready to print the next sentiment. So we've got a good thing is that amplification is kind of flat. So I anticipate we're still probably going to hang around 17 right now on this. So interesting. Ethereum still climbing, but yet at the same time, even though amplification is starting to come in under overall market sentiment, still separated a little bit. And for you guys that don't know how we track sentiment, top line, the purple line is always our top line, meaning just general statements and sentiment about a product or an asset. Red line is more about intent, what somebody's going to do. I'm going to sell it. I'm going to hold it. I'm going to, share it to my friends, tell people more. Everybody should be in Bitcoin. Those are intent mentions that get scored in a category we call amplification. All right, can't be more expensive than Celsius was. Well, that is for sure, Swamp Witch, because Celsius was very expensive because most people went to zero. Bring on regulation. Yes, I would agree with you. Regulation is going to be validation. It's going to be painful in front, but I think we'll back off other than the deals that are done in the back room, because I've lobbied in DC before. I know how this works. It's dirty. It's dirty. It's the dirtiest game out there. How can the FDIC insure Bitcoin with such volatility? That's dumb. Sticks are not FDIC. Well, listen, that's not really the case, Ninja. So SIPC is securities insurance, and that's for stocks. Stocks are just as volatile. So you already have a structure that's working in a broker-dealer application and a tool set that's already mainframed to federal regulators as it is. So yes, they could, but the key here would be that they have to abide by the situation of what the valuation is, and it has to be real assets holding against it, which is why security reserves are so big. So again, a big one. Yes, Warren wants a CBDC. For sure, again, digitally controlled money by the government. This will be the greatest hack on mankind ever. You think we've had good hacks on mankind so far? NSA, Facebook doing all these things, data sharing, all that. The fiat scam we've got going right now, fractional reserve banking, detaching us from the gold. Yeah, no, this is nothing compared to what's going to happen with CBDC. With all these bad news, maybe we could, maybe we saw the bottom. Yeah, maybe. I think the key here, guys, is watching for another potential contagion effect. I hope that we're past that. The light touch of Powell right now could get us out of that 17. Fidelity is the next monster coming in, I'm guessing. Yes, you're right, Crypto Music. Swamp Winch, you keep backing in here. Have billionaires given us any reason to trust them? No, never. Prometheus, KuCoin will be outlawed in America. Yeah, many of them will be. It'll be hard for a lot of these guys to, if they actually get to a regulatory level for centralized exchanges, you can bet that the threshold is going to cut out almost all the smaller exchanges, maybe not all, but it's going to be a trouble. We're lucky CZ exposed that douchebag. I'm almost setting back. I mean, I'm glad that Bankman is outed, but it's almost, a lot of what we got hit with, and again, it's short-term gain for long-term, or short-term pain for long-term gain. I get it. Kraken has been around since 2011. Yeah, I think that's a good one. They're not all that easy. What are you saying here? They're not hardware wallets. Yes, you are correct. Some are, and you should own multiple hardware wallets of different styles because you should be exposed to different ecosystems. Don't get caught on one hardware wallet, just like you don't get caught on one exchange. So think of it like that. That will help you a little bit because Ledger might help you there. Trezor might help you here. There are others out there as well as some DeFi wallets that we're going to do a rundown on. We got some interviews coming in, by the way. Crypto Stevo, Paul, many crypto companies, mainstream tech, are laying off. Yep, you're right. It's actually fiscally. I totally agree. With that, and that's what I said earlier. These are common moves. I'm not at all alarmed by these. It's just the situation that we're dealing with in the first place that kind of drives it all. Please discuss CZ's final power play, sell off of the USDT, Tether. I don't know where you're going with that, Robert. If you think Tether is in trouble, I mean, because if Tether stumbles, Binance drops like a rock. So I don't know. We'll see. Tether, yes, a lot of people have questioned this but it's been questioned for a long time. USDC, I think stablecoins in general, as I've said over the past few months, get to as much cash as you can. Be ready. I do think Bitcoin and Ethereum are going to have some moves here, and then your select altcoins that you guys like. Make sure and join the Diamond Circle. It's the #1 way to get into the PBN clan here, and it's the only way to get stuff from us that we drop only in the Diamond Circle is just get on that email list. It's very easy and it's free to do that. Make sure and do that. If you guys want to catch me, it is out there on Twitter @PaulBaron. We'll catch you next time right here on TechPath.